Good morning, everyone. Today's the 3rd of January. We're into our Friday. We did have a bit of an inside pause until yesterday when the GDP Now number came out a half a percentage point below expectations. That's a pretty big miss for a GDP number. Personally, I don't necessarily believe it, but with everything that's gone on through the holidays and through the election, the GDP Now number may be a little constricted in the sense that we've had a lot of movement away from expectations, kind of just consolidating. So today we have a blank pattern. We're a little bit higher today. Let's take a look at the SPY. So we're a little higher at 286 29, almost a full 2% or 2 points higher, climbing slightly. Wanted to talk to you guys a little bit about this A and B structure that I have been suggesting. So I'm going to go down to 2 hours, I guess. And so we're looking at kind of a nothing pattern here. And I've taught you many, many times to look at, ultimate highs way up here and ultimate lows way down here, which is the lowest low we've seen. We've rejected off of this low right down here. I'll draw a little arc around here. Well, that's a line. There's our little lowest low, our rejection point off of this low here. This is the lowest low right here. Big dark red, I'll make it. And so now we need to understand how price reacts in this manner. Okay. Price is setting up highs and lows throughout this range. And you can see that as we continue to roll, price again attempts to always try to make new highs or new lows, always. So when we come into these areas here, you have to be aware of the attempt to try to make a new high and a new low. This is a failure of an attempted roll. This is a failure of an attempted roll higher. So how do you determine, where that A and B failure is? Like yesterday, my inside pause pattern yesterday, I got some questions from members asking, well, how do we know this is rolled? Well, that's where you can use indicators and or other tools to try to help you determine where it's rolled. Now I'm going down here to a 5-minute bar. This is the S&P, and this is about where we started the day, right over here, 9:30 in the morning. Rolled down, found support, rolled back up, picked up some nice profits here off my trades, rolled back down, added into one trade here, rolled through here, and then GDP Now hit. Now, my patterns do not predict, they do not predict news or major events or deaths or wars or anything of that nature. So the patterns themselves are based on GANN and Fibonacci time cycle research. They're designed to predict what is likely to happen. And you've seen this play out if you followed me long enough. They're designed to predict what's likely to happen in the event that we don't have some sort of a outside news event. So they're designed to give you a clue as to what's likely to happen. Had we seen no GDP Now number coming out, we would have likely stayed within this range right here, which is basically the range of the previous trading day from about here to about here. But when the GDP Now number hit and we saw this big breakdown, traders need to be aware of the fact that the trends changed, that the breakdown occurred, that it broke below recent lows, it broke into a strong downtrend, and this kind of invalidates the trigger, the inside pause bar. So today's trigger is a nothing pattern, leading us into a inside breakaway and a breakaway pattern. We're in bearish, we're explosive trending. And what would you do at this point? Well, let's look at this chart. Excuse me. Still fairly early. I don't want that. Look at this chart. Come right across these highs. You can see that we've now kind of breached these high levels to the upside. So we're getting a bit of a reversal today. You can see where we're at right now. This 586.73. We keep climbing. So we have kind of a bit of a reversal to the upside, a pullback. And as I mentioned to you, I believe that we are going to be moving into a rally phase into next week simply because of this rally mode. Okay. So I think that we're kind of still in that washout low. And I would not be surprised unless we get some major news today. I would not be surprised to see a reversion rally back up here to the upside, given what is likely to happen. I will again highlight the fact that off of these lows, depending on where we open, I would watch this channeling level to the downside, meaning this is an upward channel. I would watch for a breakdown of the downward trend from here, and I would watch for a breakdown of this level at 582.15 and this level, which is our ultimate low at 580.91. So remember, we have this level here is our ultimate level. Make this dashed or something so you can see it. That's our ultimate level, 581.01. So a breakdown below that level means that we are going down and we're going to break down fairly hard. You can see that we've kind of moved into this flagging formation. We're going to open up here in the 586, 587 area, depending on how much this reverts. And I believe that we are likely going to try to come take out this high level right over here. I believe we're going to try to come and take out that high level, which is going to be our new, well, really, we have this high level down here too. So we're going to probably try to come take out the 588 level, maybe up into the 591 level today. Then next week, if we get our rallies, as I expect, and we get this deep rotation playing out effectively, we are going to end up getting a nice solid move back into this apex area and then possibly up into the 600, 602 area. And now, in order for you to be able to see these more effectively, I have created this. It's not perfect yet. It's called the Ment Top and Bottom Indicator. It generally is a linear regression system. And what I want you to realize is that you have a long term and a short term. These are set to the default levels, fairly long. So it's a 2-minute chart. These ADX and my fib exhaustion, another custom indicator I wrote, and CCI are just designed here to show you how you can use them with other indicators. But I wrote this last night, and the purpose of this is to try to show you, where we're getting the rotation and how it works. It is still in prototype. I'm still trying to make sure that it works. It doesn't look like it is drawing. Let me go to hourly, because it doesn't look like it's drawing these exhaustions efficiently. 5-minute. Yeah, see, it's not. All right, so I'll just leave it here. I'll have to figure out why those exhaustion patterns aren't working. So here's the point again is that the shorter term line turns blue in a bullish trend. and the longer term line turns red or blue in bullish or bearish trend. So this is a bearish trend. This is a bullish trend. This was the big selling yesterday. You can see here it caught the selling very early, rolling downward into the GDP Now number with an exhaustion at E4 level here. The E4 level is the first level of exhaustion, and then E8 would be the next, and then E13 would be the next. So understand that these are exhaustion points. You can see how cleanly they hit. Every exhaustion point, especially the E4s, they happen around short-term price rotation. So when we roll into this blue line here, this means that we're starting to get some basing. We're breaking away from a linear regression channel. Same thing back over here on the long-term system. So this gives us an early warning that we could get into a pullback. This gives us an early warning that we're going to likely get a bearish pullback. So as we get into these linear regression rotations, we're looking at a moderate rotation in price. So again, what I'm trying to do is show you guys how the markets move and give you the ability to react quicker. Remember, A or B. The way I teach people with these linear regressions and these pauses is very simple. You have a low system here. It's a pause. So we're going to draw a line and we're going to turn around and say, hey, it's got to get below that line in order for it to continue downward. Same thing here. E4, we're going to draw a line. It's got to get above that line for it to continue. These are like markers. So, okay, it got above it over here. Again, an E4, it's got to get above that line to continue. It got above it. So now look at how this plays out. Try to draw these a slightly different color so you can see them. So we're up in an uptrend. We push above our E4 level, we're bullish again. We push above our E4 level, we're bullish again. We come down here. Here's our E4 level, exhaustion, bearish. We get below it. We're looking at a bearish trend. Okay. We get again another E4 level right here. And again, you can carry this level all the way forward because it's the last exhaustion level. So you can see how we're rolling across these exhaustion levels until we finally get a breakdown trend back over here, briefly hitting this low and then rolling back up. So we have no new exhaustion levels up over here, but we're really right now, keep doing this, rolling right between these exhaustion channels. As you can see, we're struggling to get above it and then rejecting, struggling to get above it and rejecting. And that's kind of what I would expect you to do with these, is to realize that every single one of these is like a Fibonacci level. Okay. They are critical support and resistance. And I want you to realize that marking these exhaustion patterns, and maybe I'll do that in a future version. I just don't want to create too much data on the chart. But again, this is for you to be able to see what is actually taking place in the price chart. These exhaustion patterns, this is a bearish, become very important related to understanding how price moves. Okay, so we can see we have that kind of a dual pattern right across here and here. So if we get above theoretically 593 on the ES, or 5,934, if we get above this level right here, 5,934, we're going to have cleared dual support and resistance areas. and we're likely going to come up and try to target this upper area here or this upper area here. Okay. So again, the purpose behind this is to show you trending. It's designed to be colorful. It's designed to show you what's going on in the market, and it's designed to mark the exhaustion patterns for us very, very clearly. We got another one right over here. And again, it works on any symbol, any interval. So, you can come over here and take a look at gold. It does the same thing. Okay. When you get above the exhaustion patterns, you're trending. When you get below the exhaustion patterns, you're either trending or reverting. So you see how this rejected back up to the upside? That's what I want you to get aware of, is this type of rejection. I need you to start to think of A or B. If it's going to break down, it's going to break down below this level. If it does, it should continue to trend downward. If it does not continue to trend downward, that means it is rejecting, and that means that it's going to reject, consolidate, and attempt to move upward. So start thinking in terms of A or B price structures and how they work. Okay. A breakout above these highs means that it's going to continue to move above these highs. So here's a good example. A breakout above this rejection point means it should stay above this rejection point. Here's our low rejection point way back over here. So again, A or B. It's come off of this low rejection point. It's come off of this secondary low rejection point right here. It's gotten above each of these rejection points very cleanly. Big, beautiful move here and here and here. So now, how do we determine what we're looking at and where we're going to try to go? We need to determine if price is it confirming the breakdown of these lows? No, it is not breaking downward here. It is not breaking downward here. It is continuing to reject off of these lows and move higher. So we are getting very clean rejection to the upside, which indicates to me, ladies and gentlemen, that we are going to be looking at continued upward trending. Now, breaking these highs, these rejection highs off these, there's an E13. Hard to see, but let me see if I can spread these out. These are beautiful. So there's an E4, there's an E8, and there's an E13. Okay. So now, why are these so important? Why are they critical levels? Well, the exhaustion points come in stages. The way I look at it, there's three separate stages: the 4, the 8, and the 13. The 13 is kind of an ultimate exhaustion. The 8 is an intermediate exhaustion, and the 4 is a short-term exhaustion. So we get fours fairly easily. But these 13s, pay attention, because when you get to a 13, you're either going to, like with any of them, you're either going to continue to trend or you're going to run into some moderate, longer term type of pause. And you can see how we rolled down here, getting our E4 trigger here. Then we rolled over here to get into an E4, and then an E4. Then we rally up on a big gap on the beginning of the new year, and we rally all the way up into an E8, it looks like, before we roll on out of that into this low E4. So again, we are looking for these triggering mechanisms to be able to assist us. Let me get rid of all the drawings and pay attention to what's happening. So right now, short term, gold is bullish, blue line. we should be expecting a solid basing rotation here and bullish trend activity. Longer term, we rolled out of bullish trending into consolidation, which means we have a linear regression channel that's moving downward. Okay, that's what this is telling us. This will roll bullish once we get enough momentum that the longer term linear regression channels begin to trend upward. That will turn us bullish. So, this is all based on linear regression, and linear regression is kind of important if you don't understand it. It's the think of it as the mean channeling level over time frames. Now you have the ability with this utility once I release it to change the lengths. So, you can come in here and set this to 5, 10, 15, and then come in here and set this to, let's call it 30, 40, and then 50. And what that will do is it'll change the scope of the system. So you have the ability to do that, and you'll see that I really shortened down the short term indicator. It's going to be very flippy, whereas the long term indicator caught this short trend beautifully, and it caught this base bottom beautifully, rolling upward. So you can see that's a very nice setup. Very good. So we probably have to come in here and set this sucker up. So that's 30, 40, 50. We'll leave that. And we'll set this back to say 20, 25, and 30. And there you go. Nice, clean little setup. You can see how it's worked. Catching these beautiful little moves, long term, bullish, 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 bullish. The long term bearish over here, rolls right through this top, turns bullish back over here. Everything turns bullish, and we're off to the races. Okay, don't want to waste too much time on this. So come back over here to the SPY. Yeah, I got to keep moving. We're going to be looking at again kind of a flat day today. I think we're going to be melting upward. Remember to use the AB structures. I think we are melting back up into this area here. I'm going to change this color. So I would expect this kind of a move up into this apexing zone. Okay, that's 521, 522. Gold and silver are moving higher. Come back over here. Gold and silver. We have a blank day today in accumulation in bearish mode. We're looking at silver moving up a bit overnight. Nice solid move. Gold consolidating up in this area. By my count, we've reached this base. Come back up here. So I kind of believe we've had an A, B, C. We're probably going to have to come back down into this 264, 268 area. Sorry, 2646, 2648 area to find a base, find a bottom, and then rally back out of it. The big move in silver looks very positive right now. Waiting for this to continue. And then lastly, we're going to come over here to Bitcoin. Sorry, I got a little sidetracked with my other research. And Bitcoin on a 1 hour basis looks like it's doing pretty much what I suggested, which is it has moved into a new basing pattern, a new excess phase peak pattern. Get rid of this, move this down. You can see we rolled through this channel here. As kind of our first channeling system. And then we set up a new one roughly here, rolling through here. And I think that we are going to continue to stay in this upward channel until we break. So again, we're setting up these flagging channeling formations. You got two of them, obviously, off of these rejected lows. And ultimately, what will happen here, if the pattern plays out efficiently, is it will roll to the downside. Okay. Ultimately, that's what these patterns are suggesting. So the fact that we have this low, low, and low suggests that This is a very active support level, 92,250 roughly. Very active. There's the number right there, 92,300. Very active support level. But if we are unable to get above these high levels right here on this roll higher, so above 99,600, then we are going to roll downward on Bitcoin. Okay, I'm going to go back to the SPY. I'm going to be testing this new trigger system right here, making sure that all the alerts and everything work. And I will try to release it. It's just something I'm trying to do to help people. I mean, you've got to be able to understand that price either attempts to, like I said, it either attempts to move to new highs or move to new lows at all times. Okay, so there's nothing more than A or B. A, it's going up, trying to reach new highs, or B, it's going down, trying to reach new lows. B, like that. So, as a trader, I want you to remember that's pretty much it. It's either going to try to move higher or try to move lower. All you have to do is pay attention to what is doing, whether it's failed to reach a new high or failed to reach a new low or has reached a new high or has reached a new low, because as it moves up and trying to reach new highs, eventually it's going to stall and roll downward. And that's what these are designed to try to teach you. Look, it's getting ready to stall. It's breaking the linear regression channels and potentially getting ready to stall. That's what this was saying as well. Even though it's on its way up, you want to pay attention that, look, it's going to potentially roll. Same thing here. It's breaking the downward linear regression channel. It's going to roll potentially upward. It didn't for a period of 30, 40 minutes, but eventually it did roll upward. I'm trying to teach you guys how to prepare for those types of moves, and the fact that you can get these kind of little fake out moves. I call these washout moves. So we're long, 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 long. We get this little, oh, it's going to close, and then boom, big breakout. We're long, 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 long. Oh, it's going to move. It runs into the last little exhaustion phase here and then rolls down. Okay. So, point again being, you just got to kind of anticipate what's coming. Okay, guys, that's it for now. Happy Friday. I'll talk to you later.